Welcome back, guys. We got to talk about the multifamily distress right now. It's very scary, and the amount of people going all out for multifamilies is through the roof here. Like, seriously. You go around, you talk to investors, they're heavily over-leveraged, they're borrowing hundreds of millions of dollars, and they're buying these multifamily properties. But there's one thing. Yes, it's residential, and it's better than commercial real estate, and it's better than office real estate. But there's one thing. There's too many of these multifamily properties, and expenses for these multifamily properties are going through the roof. So we check out what's going on X. People are saying that anyone wondering about Grant Cardone's properties, well, he's going through a $100 million foreclosure right now. And then you have people talking about the situation. A lot of people start digging through Grant Cardone's portfolio, and apparently updates, it's actually a $450 million foreclosure. Grant Cardone is very successful in the real estate market because he over-leveraged. He even says that saving is probably suffering a lot of Americans. He's always a big advocate to be like, go all out. Just over-leverage, sell your house and buy 5 more. Put a 10% down for each home and then just rent the homes out. I mean, those are pretty good investing tips, but in this sort of market where rates are super high and then you got property taxes through the roof, and then you got HOA is super high as well, I don't really think a lot of people are willing to over leverage. And housing prices are very expensive too. You can't even sell these because a lot of people just simply don't want to buy. In fact, the amount of homes going through contract and pending is at a 20 to 30 year low, which is really bad. So Grant Cardone isn't really feeling good. And the dude is going all out on a ton of these apartments, right? Big advocate of multifamily properties. I am too. I think you want to build wealth, buying these apartments, renting them out, you pass it down to your kids. It's like generational wealth, essentially. But there's one thing about slightly over leveraging, and then you got heavily over leveraging. And then you got the Grant Cardone over leveraging. I mean, yes, he's still buying these apartments, but at the same time, you got a lot of multifamily properties going from darling to distress in Texas. Who would have thought? Texas real estate is supposed to be very strong. Texas is one of the states that still has a massive inflow of population, whereas places like California actually has a massive decrease in population. So go to places like Dallas, you're going to be seeing so many homes for sale, so many homes are being built, and even more homes for rent. The amount of homes for sale in Dallas is through the charts, and just look at the new construction. It basically fills a map, but when you add in the secondhand homes, it's even more full. Seems like a lot of people just simply don't want to buy. And with Grant Cardone's massive apartment buying spree, you're going to have to find wealthy investors to sell these properties to, which right now, a lot of wealthy investors just don't want to buy. They see the interest rates are super high. And I'm not joking when I tell you property tax is soaring to record highs. So high to the point that some people feel like they're still paying rent after they pay their home off. And that kind of sucks. If you ever seen New Jersey property tax, like a house that looks like this will probably charge you like $700-800 a month, which is like thousands of dollars every year. It's basically rent to like the state. So yes, it's not just Grant Cardone that's going through this massive foreclosure. You have several other major multifamily landlords just going distress. They can't pay their mortgage. They're months behind and they don't know what to do, because you have the additional construction of even more new family homes, new apartments, that's adding on to the competition. There's not even that many people renting. It's getting so bad they got places like the Brooklyn Basin in Oakland. Developers straight up stopped construction halfway because they couldn't rent them all out. They had built too many apartments for very little amounts of people. And this type of scenario is to the extreme where devs and investors have to all come together. Even competitors all have to come together. They talk and they're like, okay, we really screwed up here. We built too much. And there's not even that many tech workers in this field. And we could be seeing this happening in places like Dallas, places like Houston, where people just build like crazy and there's not enough buyers. And frankly, that's pretty scary. Thanks for watching, guys. Before we leave, check out the private Discord server, guys. It's 7-day free trial. And one of our traders is making a lot of money here, right? And look at this. Last week, 5 out of 5 winning trades here. And the best one is definitely going to be UNH calls, making over 100%. some of the video calls making almost 100%, and look at some of these super juicy profits here. So trade with us, guys, make some money with us, and see you later.